Hey guys, what's going on? It's your big dreamer and doer, G Dinero, coming to you today with another TA Tuesday where we'll break down all the charts. But first, remember, none of this is tax, financial, legal, investment advice. It's your buddy G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom. So let's dig into the charts. And before we get started today, I want to thank my buddy John. He made me this hat with my G Dinero coaching logo. So stoked to wear it for the first time here on one of my G Dinero broadcasts. So John, thanks, man. I really appreciate it. Love it. And we'll definitely wear it on more of these videos in the future. So let's dig right into the Bitcoin TABI chart. This is the Bitcoin TABI model. It remains orange. You will see on the right-hand side of the screen over here, we're still in this light orange zone. We did dip just a little bit at the beginning of July, went back to yellow, which is neutral. Orange is where we're slightly overheated to the upside. But if you take a step back and you look at the bigger picture, we've basically been stair-stepping our way up. We stair-stepped our way up into the $40,000, $42,000 range. Then we hit 70,000 plus or minus and sat in that 70 to 50 zone, $50 to $70,000 zone. Then we spiked up to 100,000 and traded sideways between $90 and $100,000. Yes, we wicked down to 80, but traded sideways. Then we stair-stepped back up into the 100 to 110 zone. And then we stepped up into the 110 to 120 zone, spiking up to 123 and change, 123,236 on Bitstamp. So it just shows you that we've been advancing, consolidating. And that's why none of these metrics are really overheated at this point. When you look at the Meyer multiple is sitting here right around 1.5, just below 1.5. And the MVRV score is still well below 3, 4, 5, 6, which has signified those overheated zones in the past. So when you add it all together, still in a relatively neutral state, believe it or not, even with the jump to over $120,000 with Bitcoin now sitting at $118,000. When we look on the daily chart, we can see that stair-stepping pattern again that I mentioned. Again, it'll be a little bit easier to see there, and then here. So we've raced up, consolidated, raced up, consolidated, raced up, consolidated, dipped down. This was the one dip that we had when we had the tariff tantrum or tensions or whatever else you want to call it. Jumped back up and consolidated again, spiked, and now we are in the midst of consolidating again right now, as you can see. What is also of note, if I zoom in on this most recent price action, it's starting to form what's called a bull flag. This would be the flagpole. This would be the flag right here. And I know that's a very crude representation. There's the flagpole right there. And I know that's a relatively crude representation, but typically when we consolidate after this, the next move is the length of the flagpole. So if this flagpole goes from 100 to 120, let's say, it's $20,000 long, and we break out from the 120 zone, that would take us to around $140,000. That's not a Nostradamus prediction here, guys, but it's just telling you that that's where I believe things are headed after we finally break through this cup and handle, this weekly cup and handle formation target that we've had. So you can see it right here. That's been on my chart forever. If we go over and look at a weekly chart, I think I did this in last week's video, but I'll do it again just to show you. Here's the cup, here's the handle. The distance from the bottom of the cup up here to the top of the cup is how far we will break out once we finally break out above that. So that distance, these two, would be similar right here and here. And indeed, we almost made it all the way up to the top of that cup and handle formation. So for those of you that think that TA is hocus pocus, I used to think so too, but it ends up when it comes true, then it's no longer hocus pocus, right? It's actually a pretty nice prediction. These things that you see on my chart over here about the peaks, that's where if you were using the money supply and historical cycles and everything else, that's that 1,000 to 1,050 days range of when a market typically peaks. But a lot of us, myself included, believe this one's going to be delayed, so I wouldn't pay any attention to those predictions that you see over there. Our high was made, the $123,231 was made on July 14th, again on Bastille Day, and we are still clearly in an uptrend ever since the tariff tantrums were announced back here in April, back at the very beginning of April. That's when things bottomed out. Bitcoin, believe it or not, was $74,420 on that day. And now, just a few months later, we're sitting here in the 118 to 120 range, thinking it's starting to become relatively boring. So never take it for granted. We are still overheated slightly to the upside. I wouldn't be surprised to see it drop down. We'll look here on the 4-hour chart to drop down and fill this area where we really don't have any volume. We talked about there's one little point of volume there, but here where my arrow is and there where my arrow is, and right here, you'll notice we raced through those levels so quickly that we never really threw down any volume there. So could we see a backfilling of this with some volume? Could we see Bitcoin dip down, retest support, retest the 50-day moving average? Absolutely. I would not be surprised to see a dip before we go higher. We could just keep trading sideways, which is what we've been doing ever since the last 2 weeks or so, and then just take off from here. That could also happen. Again, I see us, we really didn't trade enough volume in this range, so I could see us going back in and trading some volume in that range before we go up. So again, support to the downside, right around $110,000. Resistance to the upside is 120. Yes, we've gone all the way up to 123, but 120 to 110 to 120 is that range that we're trading in right now. Could we drop down to 110 and retest it again? Yes, absolutely. But we've been in a very tight range. Otherwise, neutral for all intents and purposes on mean reversion, neutral on RSI, neutral on MACD on the 4-hour chart of Bitcoin. Moving over to the daily chart on the Solana Bitcoin pair, again, we had the spike right here on July 22nd going all the way up to 00174, which is a giant move from where we were down here on the bottom, but still nowhere near where this pair has been in the past. The 2024 high alone was up in the 0.0031 range, way up here, believe it or not. That would be a double from where we are today. A double, meaning that Solana would need to outpace Bitcoin 2-to-1 for us to get back up here. That would imply a Solana price. Solana right now is at 181. That would imply a Solana price of 360 with Bitcoin remaining at $118,000. So for many of you, I know there's this frustration that Solana hasn't really moved yet. Honestly, compared to Bitcoin, it's been relatively flat for the last several months. And if you look at all the way going back to 2024, March of 24, we had that huge run up in Solana, and we really haven't seen anything since, with the exception of right around the presidential inauguration when the Melania coin and Trump coin and some of these other coins were minted on Solana, causing Solana's price to spike very rapidly. Other than that point right here and this point back here, we've been in a sideways range hovering between 0.0013 and 0.0018 for the last 4 or 5 months now. Solana on the daily chart, we are a little bit overheated to the upside. We did have a little pump last week. We pumped a week ago up to, 206. So not too shabby. Hitting up against this resistance zone that you see I've drawn in here. We've since retreated back down to the 61.8% fib level, and we're pretty much sitting just below that in this zone of support. You will note that the 3 moving averages are now almost equal. So if we put a number on those, the 50-day is at $160.30. The 100-day is at $160.22. And the 200-day is at $162.79. So they're within $3, a $2.50 to $3 range of each other. Really, a $2.50 range of each other. So pretty crazy to see these all super tight right here. If they spike back up through the 200-day moving average, which is what I would expect over the next week or so, that would be a golden cross. The 50 going up through the 200-day is a golden cross. Those of you that have watched my channel before know that I'm not huge on golden crosses and death crosses because a lot of times they're a lagging indicator. By that point, whatever the asset is has already bottomed, let's say, on a golden cross and is already on its way going towards new highs, right? New local highs at least. But we are coming off of being very overheated with Solana, so it's nice to see it reset just a little bit towards the mean. And RSI was all the way up here at 83 almost, and it's reset back down to 55. So 50 is considered neutral on RSI. So we've really had a huge spike with Solana, a slight retraction. Right now, again, resistance to the upside is this band that you see here from 210 to 220, let's call it. And support to the downside, we could fall as far as, let's say, 160 to 170 in that range, back down to where the moving averages are, retesting the 200-day moving average before moving up. That would be a healthy retest because you'll note that we rejected off the 200-day here. We rejected off of it here, finally broke above it, but we haven't come back down and retested it. Typically, when you're in a bull, you'll see a retest. You can see here where we finally broke up above it, came back down and retested, and then went up to highs. Came back down and retested the 200-day, went back up to new highs. Came back down and retested, stayed above the 200-day. Once you break below it, it acts as resistance. When you're above it, it acts as support. And here on the 4-hour, I won't spend a ton of time here. It's the same thing, just a little bit more zoomed in. We've been in a structural uptrend since here in the end of June so a little over a month. We've been in this structural uptrend that you see, making higher highs and higher lows, which is nice to see. We did spike out of this linear regression channel that I have right here just a little bit, back down to the midline of it, and now making our way back down towards the bottom of it, right at this same level of support, which is 178. That looks like it's the point of control for the last few months. That's where the most number of Solana tokens have exchanged hands, is right here at 177. Next most would be down here at around 150, followed by 145 or so. So we do have some support down here in the immediate support in the 175 to 180 region, let's say. Again, could fall back down to retest the 200-day, but I think it would be a very quick retest, especially with all the good things that are coming right now down the pipe with Solana. Tesla has literally gone sideways, guys, for a while now. We had the big spike, and like we talked about on last week's TA Tuesday, we're starting to see a bit of a wedge formation forming. You could almost even call that a bull pennant formation, which typically will resolve to either the upside or to the downside. It can go either way, right? It's usually to the upside, but it could go either way, these wedge formations. What do I see? Well, we had the earnings report come out, and it was mediocre at best, right? It was a beat on the earnings report, meaning they beat estimates just barely by about 1%, let's call it. But then guidance was given towards the second half of the year that wasn't super favorable, that the second half would be challenging, that we'd have expiring EV credits, for instance, on the car side of things, that the robotaxi rollout may go faster than expected, but it won't be without regulatory, hurdles along the way to try to get each of these cities opened up and then eventually new states. But again, Elon is optimistic by the end of the year that we will be available, that robotaxi will be available in multiple states. So that's a good thing that it has going. Some headwinds, some tailwinds. That's why you see this bear and bull fight and it's just relatively sideways. That's telling you there's some indecision in the market as to what the true price should be for Tesla. Some analysts are coming out saying 400 by the end of the year. Others are saying it's going to remain in this 300 to 350 range by the end of the year. But you'll note on mean reversion, it's pancake flat right there on the daily chart. If we move over here to the 4-hour chart, very similar. We've been going on either side of the mean a little bit. We get a spike, a pullback, a spike, a pullback. By the way, guys, that kind of behavior is the perfect behavior for selling covered calls and for selling puts. You sell calls when it spikes and buy your puts back. You sell puts when it bottoms and buy your calls back. And it's a way to hold a position in Tesla and make money off it while the price goes sideways. Sure, it spikes up $10, $20, $30, drops $10, $20, $30, spikes up. But if you just held it, by the end of that, shares that were worth $300 are still, or $320 are still worth $320. But if you're taking bits of profit by selling covered calls on the tops and selling puts against your position using the margin on the bottoms, perfect way to generate a little extra income. Maybe pick up a few extra shares that way or a few extra leaps or other options positions. So we're back down here to neutral, neutral, neutral. Everything's sitting on neutral right now. We are sitting right on the 200-day moving average, actually just slightly below it right now with this latest little candle down. You'll see that the 50-day had broken up through the 200-day back here. Again, a golden cross. And why don't I make a big deal about it? Because it looks like the 50 at the rate we're going is going to break back down below the 200-day moving average, which would be a death cross. Do I put a lot of emphasis on either one of those? No, I'm just looking at it saying right now the immediate resistance is 350, 360. That's been the wall that we haven't been able to get through for a while now on Tesla. And then support to the downside extends all the way down here to that 285 to 300 range. Do I think we'll go all the way down to 285? No. I think there's enough buyers stepping in at 300 right here that the 300 level is the solid floor right now. The roof, let's call it, is 350. Moving over to MicroStrategy. Big day on Thursday, guys. That's when they're releasing earnings. The latest earnings estimate is minus 10 cents a share, earnings per share. And if my numbers are correct, we're going to throw down a $38 to $40 a share positive earnings. Not cents, dollars. They're saying it's going to be a 10-cent loss. And by my calculations, it's going to be a $38 to $40 gain. Earnings per share. So it's something that the world has never really seen before. I've tried to find precedent in it, and I've never been able to find that kind of precedent. It's all due to the new FASB accounting rules. Those FASB accounting rules are allowing MicroStrategy to either take a loss on their Bitcoin holdings or a profit on their Bitcoin holdings. And they've shown a loss 3 quarters in a row. You can see back here, the first one was a loss of, where's earnings per share? Of $1.70. So call that about a $2 loss per share. The next one was a $3 loss per share. And then the big one the last time, a $16.50 loss per share, which was a massive surprise to the downside. The Wall Street analysts, yes, I said it that way on purpose, were saying that MicroStrategy is dead. It's over and done with. Sailors lost the plot, blah, blah, blah. This one is going to go the opposite direction. You will see the estimate at a 10-cent loss, and you will see the earnings at a $38 to $40 gain. I don't even want to know what's going to happen. It's going to be crazy. But the stock pumped up to 450, 460 recently and then sold back off right back down to the 50-day moving average, which is where it's sitting right now. MNAV is sitting at either 1.6 to 1.8, depending on if you're looking at the undiluted MNAV or the fully diluted, meaning with all the shares present, MNAV. somewhere between a 1.6 to 1.8. We're sitting at neutral on the mean reversion. It's just this calm before the storm, in my opinion. If we go over onto the 4-hour chart, you'll see that we are slightly mean reverted to the downside, almost one full standard deviation. RSI has gone down. Let's put a number on that. RSI is down here in the 35 range, close to that magical 30 or less, which is typically a buying signal. Again, mean reversion is at, minus 1.05. I thought it was just slightly shy of -1, but over -1 standard deviations to the downside. You'll see MACD is about to cross over right here. All of those are typically buying signals right as we approach earnings. And we're coming off of a sell signal back up here at the top of that resistance zone, which is around 455 to 460. So the current resistance zone, 420 to 460, let's call it, we've struggled to break through that, but we found very strong support in the 370, 365, 370 up to $400 range, which is where we're sitting right now. I expect us to bounce from here. I hope, and I know hope is not a strategy, that the earnings isn't a sell the news event. I can't imagine it is with all the positive things that are coming down the road. You've got some of the more astute analysts saying that they believe MicroStrategy could be $680 by the end of the year. One of them recently increased their forecast from around $618 to $680 by the end of the year, their immediate price target forecast. So I'm more of that latter camp. I do see us going up and setting a new all-time high with MicroStrategy at some point before the end of this year or very first part of next year, especially as it gets added into the S&P 500. There's no guarantee of that. The soonest it could be is in September. The latest would probably be in December. Could come later than that, but usually it happens on the first or second eligibility timeframe. And right now, MicroStrategy has met all of the eligibility criteria to be able to be added as soon as September. So I hope that helps you there. Nvidia, all I can do is laugh because it just keeps setting new all-time highs every day. Guys, this was an $86 stock on April 4th. May, June, July, August. In just under 4 months, this thing has gone from $86 to a high of $179. Let's just call it 86 to 180. A 100-point move practically, 94-point move in just 4 months. This thing is on fire. It is just, the trend is straight up and to the right. I keep saying it's got to take a breather sometime soon, especially when I saw the sell signal show up on the daily chart. I thought we would sit and take a breather for a while here at this 170 to 175 level. Yeah, we did for a week, and now it's back on fire again. Same thing when you're on the 4-hour chart. We have not been mean reverted to the downside since April 24th. I know I say that on every single video. That just tells you there really hasn't been a buying opportunity with Nvidia since back at the beginning of April. The first 3 weeks of April were the time to load up on Nvidia. Since then, it's just been straight up to the right with no buy signals being given. The strength of this asset right now is incredible. There's the golden cross of the 50 through the 200-day. We are well north of the 50-day moving average, well north of the 200-day moving average. The 100's about to cross up through the 200-day moving average. Everything is screaming strength right now for Nvidia. A lot of the tariff tensions have been relieved there. The AI revolution is here, and Nvidia is the one that's supplying the chips for the AI revolution. So there's not much else to say there. I'd be very cautious. It's the one that I've had trouble trying to sell covered calls against. Every time I do it, it blows right through my strike price, and I end up rolling it out another couple of weeks or a month and up another $5. And I literally have been rolling these things since the 140 range. I'm now at a 170, so a little bit in the money still, but I just let it sit there. It's still got a little bit of time left on it, and as each week goes by, I can roll it out another and up, out and up. But right now, I would change this red zone from a current resistance zone to the current support zone. And this one down here, I would say, is now the previous support zone, right? Because we battled with this current support zone for a while. It was resistance, but since then we've retested it and broken out above it. Now I could see us coming back down to this as support as we continue the march up with Nvidia. The next one is the STR, sorry, wrong one. This guy. MicroStrategy Tesla is the next one. And still, structurally speaking, in an uptrend ever since the beginning of 2025. Yes, it's been tradable where it's spiked several times up and it's bottomed several times at the bottom. At the top, remember, this is a MicroStrategy to Tesla trade. And at the bottom, it is a Tesla to MicroStrategy trade. You can use the linear regression channel that I have here. And when you get to the top of the channel, you're going MicroStrategy to Tesla. Bottom of the channel, going from Tesla to MicroStrategy. You can use the midpoint of the channel as your cue as to when to make the trade. You can use mean reversion by itself. And when you have substantial mean reversion dots greater than 1 standard deviation to the upside or 1 standard deviation to the downside, that could be your trigger to go from one asset into the other. You can wait for the trend to flip. You can wait for these buy and sell signals that we have here on the chart, or you can use a combination of all the above. I've also been asked, can you use ATR? Absolutely. ATR is another tool that you could be using. You could be using RSI even. You could be using all these different metrics. They're all looking at similar things. You could use the Fibonacci levels, and you'll notice it tends to turn around right at Fibonacci levels. We're on a Fibonacci level right now. Wouldn't be surprised to see a turnaround again back to the upside. Why? Because the narrative is a bit stronger right now for MicroStrategy than it is Tesla in the immediate term. I'm not talking about years down the road. I'm talking the next few months. The narrative is very strong right now for the MicroStrategy over Tesla. Finally, I always show these preferreds. It looks like the preferreds finally met their match a little bit. I think that's due to the launch of STRC, which is going to act a bit more like a money market. STRC is the fourth of the MicroStrategy preferred products. Remember, the first one was this one on the left-hand side here, STRK. It's an 8% with convertibility of 10 shares of STRK into 1 share of MicroStrategy. I've done a whole video on that before. I'll put a link in the above here. And you'll note that we've pulled back all the way back down to 103, almost back to parity or par value. But this is an area that's been strongly defended. It seems like that 104, 105 range has been a value zone for the STRK shares after hitting a high of 132. Remember, they're not really designed for that. The next one over is STRF. STRF is the crown jewel. It's its highest on the debt stack. It is a 10% note that is, there's no convertibility, and they would be the first ones to be paid out. It dropped as low as 107, 108 recently and back up to 115. The third one that you see over here is STRD. In fact, it's the same on both of these because STRC is not trading yet, so I don't have a chart for it. So I'm just using this as a placeholder. STRD is, remember, the junk bond grade. It's the one that they could pay out the dividend, or maybe they don't pay out the dividend. When it does pay out, it could pay out a 10% dividend as the target. So that's 10% or $10 on a par value of 100. This is the one that gets traded a lot. And then finally, the STRC will be the one that I think is a 10% dividend. It might be 9. Correct me if I'm wrong. 9 or 10% dividend, but it'll fluctuate in order to keep the price as close to 100 as possible. Again, this is STRD in the bottom right-hand corner right now. I will replace that graph with STRC once TradingView starts showing the STRC. Last but not least is my profit taking model. A lot of people wanted me to kind of give updates on that. I used MicroStrategy, Tesla, Nvidia, gold, and Palantir in mine. Currently in gold after having been in Palantir. This model was great at sniffing out that there was an opportunity with Palantir. I believe it had me sell it a little bit too early for gold. It would have been nice to have ridden it a little bit further, but I didn't sell the entire Palantir position, only a percentage of it in order to get enough of the GLD. That's where I currently am right now. And I'm following it exactly as I've set it up on the back test. Because I don't know about you, but a back test result of almost 2,000% by rotating versus a 676% for not rotating and just hodling, I'll take the 2,000% gain in over the last couple of years. I think I set my start date to the beginning of 2024, if I remember correctly. So I'll take that any day of the week. All right, guys, if you want to see more content like this, make sure you like this video. Drop a comment below. Tell me, what did you like best? What did you learn today? And what would you like to see more of? Also, make sure you're subscribed to the channel so that you see more videos of mine, but also like mine, because there's other incredible content creators out there that are producing similar type videos, and you'll see more. The more repetitions, the more you're going to learn it. If you want to speed that learning process, be sure to sign up for my TradingView and technical analysis class. That's available at gdinerocoaching.com, where I make you a ninja on mastering the charts. Or you could sign up for my understanding options course. I did talk a little options in this video today, but I teach you everything from the terminology through the Greeks up to buying and selling both calls and puts, and then combining those into more complex strategies. All that's available at gdinerocoaching.com. And again, guys, thanks for tuning in. I'm G Dinero. I'm here to help you increase your financial literacy to help put you and your family on that path to financial freedom. Thanks again, and we'll see you next time. Take care.